but it doesn't mean that it's going to die. Hi guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I want to give you guys alternative perspective about investment as well as in personal finance. Today I want to talk about the quarter 3 results of Alibaba announced on the 24th of February 2022. The share price of Alibaba went down a lot. In Hong Kong, it closed 6.7% lower. And in the US, initially it dropped as much as 10%. Of course, this is also attributed to the Ukrainian crisis. Alibaba financial year quarter 3 results announced on the 24th of February is actually not that bad. It's actually in line with expectations. Its revenue is slightly behind, was $38 billion, which is lower than the $39 billion expected by the analysts. However, the earning per share actually is beating expectations. We are talking about $2.65 compared with the expected, which is $2.52. But of course, the scariest thing is that the growth. The growth went down from 29% the quarter before to only 10% the quarter just announced. We are talking about this is the lowest since IPO for almost 10 years. So what are the implications then? Last year in May 2021, they gave a guidance about the growth. It was around 30% for the full financial year, ending in March 2022. If you don't understand why it's ending in March 2022, check out my last video, you will understand. They revised it downward in November 2021 and say, okay, maybe we can only achieve 20 to 23% compared with the year before, which is still okay. Nevertheless, the stock price went down a lot, of course. It's a big cut in terms of growth forecast, right? But now, if the latest quarter, the growth is only 10%, if the growth continues as 10% in the last quarter, which is still ongoing, this would be a disaster because it would be below the target of 20% of growth for the full financial year. This would be devastating for stock price. So is it the death of Alibaba as growth stock? Depends on how you define. If you define growth stock as a stock with very little earning and a lot of stories behind, like Tesla for example, then yeah, this is no longer a growth story that can support a extremely high PE ratio, price to earnings ratio. In terms of revenue, which is behind expectation and a very slow growth, I would say yes, it will not be growing as fast as before, so it would no longer be a stock with extremely high PE ratio. But it doesn't mean that it's going to die yet. But Alibaba is not yet dead, because the cloud business went up 20% in terms of revenue to $3.1 billion. Another very bright spot is international commerce. It went up 18% to $2.6 billion, which is quite an achievement. Of course, in total, they only count for roughly 15% of total revenue of Alibaba. But I can imagine that in the coming 2 to 3 years, it would be the growth engine for Alibaba and the stock price could go up a lot. There's one particular KPI somehow is often neglected by analysts and media. The annual active customer numbers. It actually went up 15% in China and 37% internationally. Altogether, the active annual customers was 19% higher. That's pretty impressive. Having said that, even though the Alibaba that we knew as a growth stock has died, it doesn't mean that we should not invest in it. As a value investor, I still see a lot of value investing in Alibaba. If you look at the price to earnings ratio, it was 15.6 on the 24th of February. Of course, there was also the effect on Ukraine. Now it's a little bit higher. But if you compare with Alibaba's biggest competitor, JD.com, it was still 28.8. So a 15.6 or roughly 17 PE ratio is still pretty low for a growth stock that's growing probably 15 to 20% per year. And if you compare with Amazon, it's even more interesting. As I mentioned, Amazon's PE ratio before the Ukraine crisis was roughly 66. And even during the Ukraine crisis on the 24th of February, it was 46. So that means the PE ratio of Amazon is 3 times higher than Alibaba, even though the growth is roughly the same at around 22% in 2021. You can check out my last video so that you can check that out. As a value investor, despite the volatility because of the Ukraine crisis, which would see more dips, I would start to collect Alibaba, just like Charlie Munger did. Are you going to buy it as well? Leave me in the comments below. If you like the video, remember like, share and subscribe. This will be important motivation for me to continue doing videos for you guys. Thank you.